Darius, good to get you back, my friend.
Thank you, sir. Good to be back.
You know, our last interview, I think a lot of people found it really interesting. You've got a very different perspective because you're in Asia, you're making markets and all of this stuff, you're seeing all the flow. Just give people a bit of your background first so they understand what it is that you do.
Yeah, so my background, I started my career at a hedge fund in Asia called Diamond Asia and was a macro trader there. I was there for 4 years, and after that I was with BNP Paribas in Singapore and New York. In New York, I was managing the Asia FX and rates desk there. Started doing crypto while I was at BNP. Back then was just doing arbitrage. Didn't need to know what Bitcoin was, just needed to know there was a price differential. At some point it didn't make sense any longer to stay at the bank, because the economics favored the crypto side. Started QCP Capital in 2017. We started off as a two-man prop shop. Today, we are an almost 80-man team across our entities.
80?
Yeah. So we've expanded quite a lot since we last spoke. We're almost 80 people across the various entities. We do crypto spot flow trading, OTC trading globally with a big focus on Asia. We are one of the largest derivatives and options desks globally for crypto. And we've been increasing a lot on the venture side as well. So, we've been actively investing in various projects, especially in DeFi, play to earn, and especially recently in structured products on DeFi. So, yeah, that's us in a nutshell.
There's a lot going on in crypto markets like now. I'd love to hear your perspective. We'll talk about some of the other stuff like the DeFi option bolts and stuff like that. But first, I just want to hear flows, what's going on, why the network isn't growing, what just any contextual information that you're seeing, because you're at the epicenter of that whole region.
No, I mean, as much as the market, there's been a lot of people saying that it's a bear market, markets are not looking great. On our end, the market keeps growing, right? Last year we traded more than 22 yards in option notional. I was joking with my guys, at some points, the trades were getting so large that we were looking at some of our client portfolios, and I was looking at the Greeks, and I was like, the Vega, the exposure, the Vega, the Theta. The last time I saw these kind of numbers was back when I was in Diamond, right? When looking at the and Diamond was one of the world's largest dollar-yen books, for example, in options. And I was saying that these books look comparable, if not bigger, than back then in the FX world, right? The growth in the derivatives and options space has been exponential. Last year was a huge one, right? Started seeing a lot more institutional participation. Started seeing a lot more improvements in terms of infrastructure, innovations. So, as much as the markets haven't been performing as well, I think there's a huge amount of growth, and I think especially in the VC space as well, you're starting to see a lot of these billion-dollar, multi-billion-dollar VC funds. Doesn't feel like a bear market to us, even though the prices might sort of suggest that. So yeah, a lot of growth actually.
So I'm going to come on to options in a sec. What about spots? What happened when China kind of pulled the plug? Did you see a big reduction in activity from China that getting replaced? How's that all playing out?
Yeah, so obviously that was last year. That was May, yeah.
That's right. Because the market's never really recovered from that. It's been sideways. Good for you because it's been a choppy, volatile range. But yeah, it kind of hasn't done a lot.
Well, it was a huge deleveraging thing. And over the year we saw folks moving out of China. So once again, to us it felt like growth because a lot of the folks moving out of China moved into Singapore. So folks were moving out of China, out of Hong Kong, and Singapore was one of the catch areas for that flow.
That will have been the bigger money, right? That will be the family offices, the trading entities. What about Chinese retail? Did they just evaporate?
No, I think we've been talking to a lot of the Chinese players on the ground. They're no longer allowed to advertise, no longer allowed to talk too much about it, but they're still functioning on the ground. There is still a lot of retail activity. There is still a lot of investment activity as well. Just that a lot of the investment operations are held offshore, but you still get a lot of Chinese investors, right? Because in the end, a lot of the investments are done in stablecoin anyway. So you have much less activity on the ground in terms of speculation and trading, but the exchanges are still there. They haven't disappeared. They're just not as loud as they were before. And all the VC guys, all the investment guys are now in Dubai, Singapore, the US. The miners have moved out to the US as well. So everything is still going on the same. And I think that's the reason why the bounce was so convincing as well, right? I mean, we hit almost 30K levels and went back up to almost 70K. The activity didn't cease. In fact, the activity probably increased. So all we had was a shifting of the players out of China into various parts of the world, and the activity continued. So yeah, I don't think you can kill Chinese activity. You just sort of disperse it a little bit, if that makes sense.
So what's your theory on why the market has been so sideways?
Well, I mean,
not that it actually needs a reason, but I'm just wondering whether you've got any grand master plan.
No, I think one of the reasons is options as well, right? I mean, last year we saw the deleveraging cycle down to 30K levels, broke it for a while. And then we had the hype over the Bitcoin ETF, that drove us back up to highs again. And then at the highs, of course, you were seeing you could feel the leverage in the market, right? And the excitement over a lot of the speculative activity that was happening. But at that point, what we saw on the vol side was a steady. There was a little squeeze in vols in August. But since then, we have seen steady vol compression all the way to now. So it tells you that, players are coming in the derivative space, but they're not necessarily punting on Bitcoin long direction per se. They are participating in options. They are compressing the vols. We've seen a lot more the growth of a lot more types of structured products, private banking type products that have been participating in the crypto markets. And I think since last year, with implied vols were over 100 easily. And last week we saw implied vols trade below 50. So I think you see a sort of maturation of the market as a lot of these players come in, and we didn't expect it to come so quickly, but it has come very, very quickly, right? So with the maturation of Bitcoin, Ether, and the derivative markets, at the same time, we see a lot of capital being channeled into other altcoins, right? So if you look at Phantom, Luna, Atom, Roll, some of these other layer ones, while Bitcoin and Ether have been trading sideways, these guys have, in the last few months, have gone 100%, 100%. So what we're seeing is the maturation of the core assets like Bitcoin and Ether, with a lot of more institutional activity coming in, and then the speculative flow being channeled to other altcoins. So you're starting trying to see the breakdown of correlations as well.
It feels like a rotation, right?
It is. So, it is. Yeah.
If the overall digital asset market isn't growing massively, people are looking at returns by looking at the different tokens, different spaces.
So like relative value plays and whatnot, and a rotation out of coins that I think the market has the view that Bitcoin and Ether no longer have the kind of exponential upside that they had before. It's become a bit more like a more something that is the beta in the space, right? And you see this very closely in the last month or so, where Bitcoin has been tracking Nasdaq. It's become a macro asset. The correlations with global markets have become very high as well. So yeah, you're starting to see more of this breakdown between the correlations in crypto. You can no longer see it as a monolithic market, and you have to pick which segment and which coin you wanna invest in to get the kind of beta or alpha in the space.
I mean, I guess a lot of the traditional hedge funds, forgetting the crypto hedge funds, but traditional hedge funds have come into the space. So they correlate everything with risk, right? It's risk on, risk off. I need to reduce my leverage. I need to increase my leverage. And I guess that's what's causing some of this, right? Indeed,
for sure. So we've seen the interest of hedge funds, traditional hedge funds, guys that I used to speak to back when I was in the hedge fund industry, guys that I thought would take a while longer to come, but they have come in. They have started opening dedicated crypto strategies, dedicated crypto funds. They have rotated their FX option traders into crypto. And these guys are more than happy to be there. So you're starting to see, so I think, as far as Bitcoin and Ether are concerned, I think it starts to trade and look like a macro asset, like FX or commodities or, something that's very familiar to the mainstream.